All right, time for the big reveal. The two TSP funds that I put all my money in are Hey guys, Melissa Dargan here, and welcome back to my YouTube channel on personal finance. As a former federal employee, I have a Thrift Savings Plan retirement account, the TSP. And in this video, I'm going to reveal to you the two funds I put all my money in, share the percentage breakdown of how much I put in each fund, and more importantly, explain why I invest the way that I do. When it comes to finances, I want to highlight how important it is to understand the why and the how. Make sure you educate yourself. Don't just listen to someone who's like, I have a hot tip, because that's the easiest way to just lose money if you don't understand what you're investing in. This is why I'm breaking down why I invest the way that I do. Because let's be real, what's best for me may not be the best for you in terms of investments, but I want to give you all the knowledge possible so that you can make an informed decision. Quick disclaimer, I'm not a TSP advisor or a certified professional. I'm just a former federal employee who has a TSP account, and I'm sharing my thoughts on how I invest my money. Hopefully you find it helpful. Also, if you'd like to see more videos on personal finance and the TSP, go ahead and hit that like button. Thanks for your support. And make sure you subscribe to my YouTube channel so that you can be updated whenever new videos are released each week. Liking and subscribing are free and definitely would appreciate your support. Thanks, guys. Now, before we dive in and I share which funds I invest in the TSP, it's important for you to know and understand the different funds that exist. And so if you need a quick refresher, go ahead and check out my TSP Explainer video, link up at the top, or I'll include the link in the description below. And for those of you who already know all the different TSP funds, it's time for the big reveal. Which funds do you think I invest in? All right, drum roll please. The two TSP funds that I put all my money in are the CNS funds. CNS funds, CNS funds, CNS funds, CNS funds. Now that you know the two funds that I invest in, the C and S funds, I'll also get into the exact percentage breakdown of how much I put into each of those funds. But before I do, I'm going to share the 3 reasons why I chose the C and S funds. And now, some people may say,
well, Melissa, the CNS funds, look how risky they are. Why are you investing in them?
Here's why. Reason number 1, the C and S funds in the long term have outperformed all other TSP funds. That's right, they have outperformed all other TSP funds in the long term. Again, let me drill this down. The C and S funds in the long term have outperformed all other TSP funds. I mean, just look at this performance. On the TSP website, when we're comparing the different rates of return and we're looking at the different life cycle funds and even the individual funds, G, F, C, S, and I, you can see here that the C and S funds tend to outperform year after year. And yes, there are some years where they do lose money compared to other funds. However, on aggregate, when you're looking at the 5 or 10-year comparison, the C and S funds cannot be beat. Now, if we're looking at the C and S funds in the long term, look at the lifetime rate of return. It's over 10% for both funds. Also, in the 10-year rate of return, you can see that it's over 13%, nearing 14% returns. Now, if we compare that with the I fund, it's almost double the I fund. And now let's check the other individual funds. Let's, instead of the I fund, replace it with the F fund. And you can see also CNS outperform in the long term. And obviously, let's go ahead and also try the G fund. And if you're looking at the G fund, outperforms it by at least double. You can see here that with the CNS funds, that its performance in the long term has great returns. We can also look to compare it to the life cycle funds. And again, if we're looking at lifetime, you can see here that maybe the life cycle 2050 in the long term can rival the 10%. But if you're starting to look at the 5-year, 3-year, and 1 year, let's compare that again to the C and S funds And you'll find that even in the shorter term years, look at that, 15, 16%. In the last year, 31% to 18%. There's no way that even these life cycle funds can even compare to the individual C and S funds. Reason number 2 is that the C and S funds are already diversified. A quick recap is that the C fund matches the performance of the Standard & Poor's 500, the S&P 500 index. And you may be asking, what's the S&P 500 index? Well, it's the stock market index that measures the stock performance of 500 large companies listed on the US stock exchange. Here are some of the stocks included in the S&P 500. It includes companies like Apple, Microsoft, Berkshire Hathaway, Facebook. So by investing in the C fund, which follows the S&P 500, you aren't just buying into one stock or one company. You're buying into, as you can see, a full list of all the different companies and diversifying your risk. And now let's get to the S fund. The S fund matches the performance of the Dow Jones US Compilation Total Stock Market Index, also known as the Dow Jones US Index. It includes about 3,741 US stocks that trade on the US stock exchange. It includes large, mid, small, and micro-cap companies. And now you may be wondering,
Well, Melissa, the C and S funds seem similar. Why are you investing in both? How are they different?
the primary difference between the Dow Jones Total Stock Market Index and the S&P 500 is that the S&P 500 includes only large cap companies, whereas the total stock market includes small, mid, and large cap stocks. The similarity between the two indices is that they both invest in US stocks only. So for the people who are saying diversification is key, it's important to not put all your money into one thing, the C and S funds are not one thing. They track and follow different stock market indices, and by investing in them, you're not investing in just one company or one stock, you're actually investing in multiple companies and multiple stocks, helping you diversify. And for those of you who are thinking, well, if you're only investing in the US stock market, then that's not as diverse, because what happens if the US stock market crashes? And that is a good point. And there is the I fund, the international fund. But here's why I'm not a fan of the I fund and why I am not going to invest in it. For some people, they may think that diversifying into the global stock market is better. And for me, when I'm looking at the I fund, the level of risk does not match the return on investment. Just looking at this comparison, and we're looking at the C, S, and I funds, you can easily see that in the lifetime return, the I fund underperforms, but when you're looking at the risk, the I fund has more risk than the C and S funds. So for me, even though the I fund can help you diversify, not keep all your money in the US stock market in case something happens, when we're looking at past performance and what that looks like, I just don't believe that investing in the I fund is worth the risk that you have to take given the low rates of returns. Reason number 3, the C and S funds have a solid track record. Remember, the C fund tracks the S&P 500 and the S fund tracks the Dow Jones Total Stock Market. Check out the benchmark indices they follow. Look at the overall trend. Spoiler alert, it only goes up. Even during times of recession, the stock market comes back. Look here, the 2008 crash, yes, the stock market drops, but then you see what follows, an upward trend. Then you can see the 2020 coronavirus downturn, and we're even higher today. As you can see, the two indices that the C and S funds both match tend to trend up. And while I can't predict the future, and obviously past profits don't guarantee future profits, I am optimistic and think that even with future downturns, that you're better off investing in the long term now and just keeping it in the C and S funds, because as you can see, even with recessions and downturns, if you look at where that low point is and where we are today, it's still higher overall. So long as the US economy continues to grow and innovate, I stand by my C and S choice. Ultimately, the C and S funds do carry higher risk than other TSP funds. But for the reasons that I mentioned, their performance and diversification show me that these funds are worth the risk. How does that saying go? No risk, no reward. So now it's time to share how much I put into each of the funds. I mean, there's so many different variations. You can do 90-10, 80-20, 70-30, 60-40, etc. And do you put more in the C or the S funds? And for me, this is how I break it down. In looking at this chart and looking at the returns year after year, you can see that in some years the C fund is up, and other years the S fund is up a little bit more. But when you look at the lifetime aggregate, they seem pretty similar. So for me, I do, drumroll please, 50-50. 50% in the C fund and 50% in the S fund. I split it even. This way I can take advantage when the C fund may have a better year or the S fund has a better year, and I can take advantage of the upsides and also mitigate some of the low sides when one may tank more than the other. One thing to keep in mind is that if you choose to reinvest your earnings, the fund allocations may shift a bit. In December 2020, I had 50-50. Today, March 2021, it's slightly off. This is why I like to check quarterly, every 3 months or so. That way I can shift back my allocations to 50-50 and make sure it doesn't get too skewed one way or the other. With all this talk about which TSP funds to invest in, let me know if you're interested in getting a video on how to change your allocations in the TSP and how maybe to change the contributions that you're putting in. Since you may want to be shifting from different funds, let me know if it will be helpful to create a video on how to do just that. Put in the comments below. Now, if you found these TSP tips helpful, you know what to do. Go ahead and hit that like button. Thanks for your support. And make sure you subscribe to my YouTube channel so that you can be updated whenever new content is released. Remember, it's free to do, so please subscribe. Thanks, and see you in the next video. Wait, you're still here? Go ahead and check out these other personal finance and TSP videos that I think you'll enjoy. See you in the next video.